Okay, hello there, traders. Welcome to the long-awaited return to TOGS Trading Podcast Season 3. It's Paul here, and as always, for those of you who are rejoining us, it's fantastic. Thanks to all of those people who have rejoining us, watching us, dropping us notes, okay, giving us feedback. We've always really appreciated it. It's been, it really is, it's amazingly helpful, and it gives us some insight into what we're doing is helpful, and that it's that it's beneficial to you. Okay, as always, if you're joining us for the first time, the TOGS Trading Podcast is the old Gits show, and it's basically based around myself and my good buddy Big Ian here, taking our conversations from basically sat in the corner of Keogh's pub in Dublin, having our long-term trading conversations and turning it into a podcast that would actually help other traders on their particular journey. But more of that in a moment. So as always, I'll introduce my partner in crime, so to speak. Big Ian, looking good. Billy Ray, how are you doing?
Thank you very much. Okay, looking good yourself.
Well, he's too kind.
Yeah.
But now you put the glasses on. Now you can change that view.
Now I can see it.
It's been about 6 months or so since we've done a podcast. How are you? What's been going on? What's your news?
Not a lot, really, to be quite honest. I think I've been slowly trying to change my style over the last 6 months to doing sort of bigger, longer trades, and that's kind of half worked and half not in some ways. And I think the reason why it didn't work as well as I would hope that it would work is that I tend to still think like a scalper while I'm trying to do these longer trades. And one of the things that you do with that is that scalping is very much about just jumping on and jumping off. You know, you grab 3 points, you grab 4 points, you grab 5 points, maybe sometimes you get 10 points. You're really happy with that. But these trades are more about picking a turn point in the market. So you're basically picking, bottom picking or top picking in some matter of fact. So you're doing something like a 60-minute double bottom. Like this is exactly what I did yesterday. I did a 60-minute double bottom, and then I got out of it too early because I would think like a scalper. So I haven't worked out some of those little things and didn't re-enter it. Where if I did it as in this is the turn point, it would have done 14, 15 or whatever it was. I can't remember. It's quite okay trade. So I've been shifting style shifting a little bit because I want to change the lifestyle around trading. It's not as intense, and it's not as you're not switched on all the time. You're not working as hard, because scalping is quite hard work. So it's been an interesting few months.
Yeah, it has been. And here we are. This is the start of July. Okay, start of calendar Q3 for the year. I've been sort of saying about how that Q2, sort of April, May, June, was some of the most volatile we have seen for many years for various reasons. How did you find that? How did you find navigating that landscape?
I find volatility fine. I don't mind volatility too much, especially on the time frames that I'm working on. It's a blessing in a lot of ways, because the same stuff tends to work as always, and the same stuff tends to fail as always. So there's not really it's not really for me, it's not that particularly challenging. It's actually generally quite good. I mean, compared to this time of the year now, we're starting to really see the summer action settle in, and summer action is completely different, I think, to the September. I mean, September, you go into a move in September, and then there's energy, and then it's going someplace, and people are trying to do things, where you have huge dead periods during the day with the ES, choppy action, retests. That's something which really annoys me, is retests. That kind of stuff. Like, so it's a different action. It's a much harder one, and then you can really see it, because I work beside some pro traders, and they're all on holidays. People are taking their holidays. I'm going to be on holidays in a couple of weeks for a couple of weeks, and then I'm back for a week, and then I'm on holidays again for a week, and so on. There aren't the same amount of people in the market. And I think a lot of the shorter term traders particularly tend to exit the market at this time of year. There just isn't because there isn't the action. You're not going to make your netty in July.
Yeah. No, that's true. That's true, and that kind of leads us into a nice little bit of segue about. I think we're going to be covering that in one of the future sessions on season 3, which is really about whether it's even worth trading in August. I think that's what we'll talk about in one of the future sessions, and also allows us to sort of update people is that historically the sort of last 2 seasons of the TOGS TP, we've aimed for kind of about 55 minutes, kind of 60 minutes. Some people probably call that long form. I think for season 3, because we've both got a lot going on and we're busy, we're probably going to make these sessions a little bit shorter, probably about 25, sort of in the 25 to 35 minute target area. That's what we're going to be looking for. As always, if you are watching this, if you've got any comments or suggestions that, things you'd like to see us talk about, like to share our experiences on them, by all means, just either, ping us or, put a comment on the YouTube channel, etc. And we do read them all. We take them all on board and stuff, and we'll try and build that into some of the sessions on season 3. We're very happy to take that on board. But yeah, you're absolutely right, Ian, is that we're going to start to quiet the tide has gone out. The tide of volatility is starting to withdraw after what has been a really quite exceptional Q2, as always. The last couple of days, I've basically just been finishing up Q2, doing my reviews, and then basically starting to do some of my longer term position trades, looking at how they've operated. It surprised me that my kind of longer term position trades based off monthly and daily charts, they've done really well this year, and there is no one more surprised by that than me. If anything, I thought I was going to get shot to pieces and stuff, but that's actually done really well. And as I said, there's no one more surprised by that than me. Whereas the shorter term trading, I have found there has been some great weeks, some absolutely fantastic weeks, and then there's other weeks where it has been like sort of pulling teeth. I've even had in this last quarter, I've had 2 days where I have literally had 3 losing trades on the chart, and then my risk management rules kick in and I'm out. And I was looking back through my records for that, and it had been about 11 months since I'd had early morning intraday FX session where I basically had 3 losing trades on the trot. Okay, and that's probably just an indication of A, some of the volatility, and B, at times some of the lack of volatility. Everybody kind of gets everyone gets excitable. They're like small children who've been drinking Sunny Delight and stuff, and everyone gets a little bit giddy and a little bit excited. And then there is the opposite side of that, where actually nothing happens. Everybody's too scared to make a decision, and you just saw kind of volatility collapse for that session. Now it might only be for that session, but you've just gone from trading at extremes of volatility to basically nothing happening whatsoever. And so I was chatting to a couple of clients of mine who are intraday traders and stuff, and they've been working their way through this last quarter, okay, as part of their trading journey, and they've had challenging times, they've had good times, they've had challenging times, and I've just said, listen, if you're at the start of your journey as an intraday trader, you should really be giving yourself a pat on the back that you made it through that quarter, okay? That actually, you were able to survive, and in doing so, as we've said before, you acquire the skills that give you the opportunity to prosper in future. So if you have found it a rather challenging quarter, then you are allowed to give yourself a pat on the back if you've managed to stick to your rules, okay, and you've managed to navigate through what has been some tumultuous days, really, some absolute tumultuous days in markets. Then fair play to you. All right, you can enjoy a bit more of a peaceful Q3, I suspect.
Yeah. I don't know. I found as well some of the days, the things that if something is going to happen on a day, it tends to happen later in the evening, which actually doesn't really suit me because I don't trade in the evenings. And that was something that was catching me out because I was finding that just after the open that I was sitting there for 2 hours and nothing was happening. And then I was going in and I was getting a stop and then I was getting kicked out and, whatever. And then I'd have to go out and do, family things or whatever. And I was finding that was quite a thing. Trying to think of other things, because in some ways, if I stick to my own system, that a lot of these things are not too difficult. Because an awful lot of my trades are scalps on a tick chart. So I have because if you have the idea that price is going from one place to another place, so if price is going from the bottom of a trend, or sorry, the bottom of a range to the top of the range, or even the middle of the range, you have maybe 30-point journey to go from one point to another point. If you go down to a tick chart, what you're going to find an awful lot of the time is that the very quick signals will work in the direction of the trend, basically of that small little trend of the move between the bottom and the top. And that's there are traders who do that, and that works really well, I think, for what you call them, the prop houses. For that style of trading, it works really well for the prop houses. And I do quite a lot of, and a lot of those, they tend to still work, but they'll only work for a couple of hours during the day, because then what happens is that earlier in the day, basically, if this was September at 12 o'clock during the day, I can do loads of those trades if I get bored, or if that's what's available. Where there are not very many of those trades at this time of year, that earlier in the day, everything's a little bit later. They're waiting for people to go in. So I don't know. I got very frustrated, but I think I got very frustrated with trading myself earlier. About 3 months ago, because you're sitting in your house, you're working on your own. It's a particularly antisocial job, and I got quite frustrated with it from that point of view. And that was probably a bigger thing that was happening to me over those last couple of months than what was going on over the market, because I'm 15 years or something doing this, and that's 15 years of sitting in a room. You spend less time in a cell if you committed murder, besides being a trader. And I'm not sure the food's better either. Quite honest with you. And that's what trading is. It is literally super noodles and sitting in your grind. That's what your career will consist of. And virtual friends. You have so many, like, you're talking to people all day long. You don't see humans. And I found that I just had a bit of a thing about that a few months ago, where I was like, where it was like the social outing of my day was the school gates, which is that's not a place you want to be doing yours. That's more political than Parliament.
No. It's not around Christmas time either. You looking like Santa and stuff. All the kids at school, they'll want to come and have a cuddle with Santa and stuff. That's the thing, isn't it? That's your
that's the real reason why then I was like primary school at whatever. It's
one of the things I have experienced this week as well is that this isn't a brag, but I was very fortunate to spend sort of 4 or 5 days last week on a cannonball run, driving very sedately and very diligently around the towns and villages and mountains of North Wales with my friends. We do it once a year, etc. And it was great fun. And I didn't look at screens or trades or anything. Nothing for about 4 or 5 days. Just like literally, just stayed away from markets, etc. It was about 4 or 5 days and stuff. Sort of like kind of Wednesday to Sunday. But the interesting point is that. Even I was surprised that actually, even just 4 or 5 days away, for someone like ourselves who've been doing this a long time, I realised kind of when I was on Monday, I was completely off the boil. All right, completely, out of the loop. I had to effectively just kind of go back through my processes to start to get myself back into a groove, into a connection with the market, into a sense of what's going on. And probably that will come in to people who are now starting to sort of shift into kind of maybe holiday mode. Is that even if you're a fully fledged trader, even if you're doing it every day, it is important. We've talked about this in previous sessions. It's important for you to take breaks, important for you to take holidays, etc. But you shouldn't realize exactly how quickly those skills degrade. Okay, they atrophy really, really quickly. And so, there is I was talking about this last night on one of my groups. Is that a case of you go away for a couple of weeks holiday, you've needed it, you're ready for the break, you're feeling fabulous, you're feeling refreshed. And so, of course, the urges, you can't wait to get back to the market, can't wait to get back to trading. And so, you come back with, renewed vigor and enthusiasm and launch yourself back in, and it goes horribly wrong because actually you are completely out of the loop, right? You are completely disconnected from the market and stuff. And so you know, you have to remember to basically, if you are having a nice break over the summer season, you know, make sure that you don't just launch yourself back in day one, that actually ease yourself into it. If possible, you should also have processes that help you just basically literally go through getting back into your groove, getting back into your kind of your working routine before you start pulling triggers on trades, okay? Because it's you will drop out of the loop much faster than you think. Even for long term experienced guys and girls and stuff, that's something you have to manage. Well, certainly I do. Yeah.
Oh, no, definitely. I mean, when I come back, I took last week off, more or less. I tried to take last week off. Which I actually found really hard. I was really quite bored, without trading. Wherever you was really looking forward to go back to work on Monday morning, which I suppose is a nice thing to say to us, to a certain thing, that you're looking forward to going back to your cell, and sit there and eat your super noodles and, live your life. But I found it really quite difficult to take time off. When I come back, if I have taken actual genuine time off, I'm going away to an island in Germany. And that will be actual time off, as in there isn't an internet connection, or a very good stable internet connection. When I do come back from that, I start off. It's the same process. You start off with the minimum position size the very first day.
Yeah.
Probably double that the day after, depending on how you got on. This week I didn't need to, because I hadn't really managed to disconnect myself from the market, even though I had intended to take time off. So I just got straight back into it on Monday, and I see that a lot with professional traders as well. Like, you get an awful lot of professional traders go on holidays, and then they just checking in. They check in to the market to a certain extent, because it really is. It's very difficult to be disconnected in the modern world, and if you're sitting there, like one setup I've been really looking at recently is the gap trade. Which I have. It's a really simple trade, but I haven't mentally perfected it in my head. Which is so you get people coming back in to do gap trade or something like that, because they don't take that long. Most gaps are closed within 2 hours. Most opening gaps in the ES are closed probably within 2 hours. Actually, the only problem I have with gap trades is that I'm sitting there in a gap trade. So you start off your morning with the gap trade. The gap starts before the market opens, really, because what you're doing is that you might have a 20 point difference between the close and the open, and 10 points is traditionally where people call it a gap and go. So they're not expecting a gap close if it opens more than 10 points. So a lot of the time around 1:30, 2 o'clock my time, Irish time, GMT, they start moving price back, and that's actually really the start of your gap close, because they want it to open at 8 points or 9 points or something like that, and then close it in the first hour. That's where your gap close starts. So I start off in the morning a lot of the time, and I do get ready for the gap if there is a gap, and then I forget the probability of it by 5 o'clock. which I always think is that, because a lot of the time when you're sitting there and you're doing other trades, you might have, on some days, you have an 80% chance of, like on a Tuesday or a Thursday, an 80% chance that it's going to touch the half gap. It's going to half gap fill. And that basically means even if you're 15 points away from that level and you think the price is going up, the probability is 80% of the probability it's going to come back on you. Yeah. And if you remember that probability, you have to remember that probability when you're trading, when you're in a long trade, because they get, and especially if the gap happened if you had a big gap that happened 2 days ago or 3 days ago and it's still open, you still have a high probability that gap is going to, because it really takes a lot of power to move away from the gap. So that's one of the things that I've been sort of trying to consistently remember, is the probability of the gap, even after I finish officially doing the gap trade, because the gap trade sometimes works and the gap trade sometimes doesn't work. But it's a great trade. I still think it's the best trade for new traders, the best setup for new traders if you're going into it.
I'd agree with you. I'd agree with you that it's
Yeah.
a good. It is a good set because it's time focused. There is a
Yeah.
specific time when you need to be there to do it, and basically the trade is either there or it isn't. It's quite simple rules. There's not much ambiguity, and then you can just you can literally set and forget. For most of those trades and stuff. So years ago, I used to trade a version of that on FX markets on the kind of open on a Sunday, and it was a great start of the week. It was a great way to set the tone for the week because literally from 9:30 on a Sunday, it'd be literally from 9:30 on a Sunday night till about 12:30, those kind of 3 hours, do the work, set the trade, just manage the first little bit of it and then let it do its thing, etc. It was a real good way to set the tone for the week, get your head back in the game. But equally, I think if you're doing these on the indexes, there was American indexes in the what was the afternoon, but for their morning. It's not a bad, it's not a bad, it's a good, simple, solid way to start start engaging with markets, etc. So how many trades a week are you normally putting on the gap trades then? What are you covering? Are you just doing the ES? Or are you doing all of
just
those?
ES. I don't do anything besides ES at the moment.
I was going to say.
It depends. It really depends because the thing is that it depends how big the gap is. It depends where the gap is. It depends because sometimes you can be doing a gap trade that looks like something else. Your ordinary long. Like if you're in an uptrend, it depends as well a lot of the time. If you're in an uptrend and you have it's gap down overnight, and it gaps down into support, that's a trade you would do anyway. It just now has a higher probability. So you still have an 80% probability that you're doing it. So I mightn't consciously, in some ways, if I was writing down my list of stuff, I mightn't put that down as a gap trade. But in reality, it's exactly the same trade in exactly the same direction, done exactly the same way.
Yep.
And that's also, I think, because a lot of the time I'm trading using the continuous contract. So it doesn't show gaps. It's es.de, the delayed one, that shows gaps. So I tend to be trading that one. I don't tend to trade the other one. So I'm not always completely conscious. I'm doing a gap trade, I'd say, every day, but I wouldn't call it a gap trade. It's just a bounce from support. The other big one, which I was trying to develop a bit more, but I was trying to develop that a bit more for newer traders, was just double bottoms. Because if you're in an uptrend and you have double bottoms, there's only three types of double bottoms. They're actually double bottoms where they're almost exactly the same depth. There's the double bottom where the second one is slightly higher, so it front runs the previous low. And I use a fib for that to make sure so that it either comes down to that fib, and if it doesn't touch that fib, then it's some other setup, something else is going on, and then you go and look at whatever you're doing. So you have your fib. It's a fib setup. And then you have ones that come slightly below the previous low. Now, often that's just wicks. And I've been trying to work out a little rule just to do for newer traders to work out a rule for that. And I've been flipping it around and using it minus 23.6 and say the price has to be contained within that minus 23.6 zone, or else it's a different trade. And that's basically it. There isn't an awful lot more of them to them, because what you're basically doing is that if price is in an uptrend, they have to defend those areas. If it's a reasonably significant double bottom, they have to defend those areas. Because if they don't defend those areas in an uptrend, they're inviting in shorts, because people will start to see it as weakness in the market. The only caveat to that is if there is major support just that little bit lower or just that little bit higher or whatever it is. Well, certainly not higher, but if there's a support a little bit lower, that might become that they might push price to that and then reverse it back up. But in general, the double bottoms are quite a good thing in those types of trades, and then you can speed them up. So you might start off doing 15-minute or 60-minute double bottom, but then you can just move straight down to doing 5-minute double bottoms in an uptrend in support, and that's it's quite and that's quite a good, and again, it's very formal setup. It's, you can write out rules for that and then trade those rules. If you're a newer trader, it's not difficult.
No, it's not. And I myself will kind of use double tops and double bottoms, unequal tops and bottoms, or 1, 2, 3 patterns. I call variations of them, and similar things as yourself. Okay, normally, classically, the second leg shouldn't go beneath the first leg. But there are occasions where it does. It will flash lower than the sort of the first leg, the sort of the first low, and I will only countenance that based upon the price action there. Okay, in terms of if it is supported price action, then that would allow it to come into my purview as a possible opportunity. I would use the fibs to give me targets, but not necessarily as an entrance point for the second leg. And I like to see support and price action on the second leg to give me the heads up that I might want to go early and go aggressive rather than waiting for the break of the sort of the neckline or the 0.2. So maybe we'll do that. Maybe we'll do a future session just on double tops and bottoms. All right. Talking about it might be not necessarily the easiest way and stuff, but we can add a little chart in for the YouTube version and stuff. Maybe we'll add. Maybe we'll do that. Okay, on a little bit of a session on double tops and double bottoms. We could, between us, we could do that, couldn't we? That would.
No problem. Yeah, by the way, the thing with those wicks, where I used to come across that was when I started off first. I had a setup for earnings caps, and I had to give a lecture on it one night on earnings caps, and basically what I was trying to explain is that, to use an expression, buy the fuck up, because what would end up happening is that price would come down to a lot of those wicks. You have various competing systems in the market. So some people are using fibs, some people are using traditional technical analysis, that kind of stuff. So a lot of the times those wicks are simply to touch a different system and to give that system then its valid entry. But what was consistent is that if they're going to do something, they actually have to buy it aggressively, and that creates the wick. And the wick is confirmation, basically, that your trade you're in the right place, because they're not letting price go down. So when I used to be teaching them how to do or lecturing on earnings gaps, which are not as good anymore. The earnings gaps, I used to say that the price just had to be bought the fuck up straight away, because earnings gaps are not. They used to be a lovely, easy technical trade that you could do, because you would have earnings. You'd look in the earnings and see there was an earnings surprise or blowout earnings, in the first 3 lines of every report. And then you see a gap, and then you could put a fib in to give you an entry, which was between the 50 and the 618, and then you would trade that fib until it had moved on far enough, because it had created a little island, and then it'd move, and the average return was about 20% over the next few weeks, over the next 3 months, basically. That they'd move pretty consistently, but that wasn't the market changed, and you don't have that same style of action at the moment. Not as you do see it, but you don't see it as all over the place. So it's not a setup that works especially well. You could go into Apple. It's one of those setups where I wish I knew how good it was at the time when I was doing it. Looking back, it was like I found this lovely piece of gold, and I just didn't exploit it as much as I should have possibly exploited it.
No, yeah, you're always too big when you're wrong, and you're always too small when you're right. You're welcome to trading, ladies and gentlemen. Yeah. So, but that probably gives us a good point to draw this to a close, because I appreciate, because we've not been on here for a while, we could speak for hours just talking about what's been going on in our lives. But it kind of draws us into an opportunity to close there, because also I think one of the sessions we're going to schedule is talking about AI. Okay, I can't switch on any kind of social media without being bombarded with finfluencers basically telling me about how AI is changing the trading game, blah 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 blah. Right. and we're going to do a session on the right. Is it going to make us traders obsolete? And my view would be no, but we'll discuss that in a session. Mm-hmm. So keep an eye out for that, and I hope that I hope you'll find that useful. And as I said, if you've got any suggestions of things that you'd like to see us talk about, okay, and then by all means, please let us know, and we'll happily sort of build that in and give our own take on that particular topic. So listen, let's draw this to a close, Lee. Lee, I don't know why I'm calling Lee, Big E and stuff and what have you. I don't know where that's come from. So, but yeah, listen. Thanks very much for joining us. Okay, thanks very much for everybody listening to us. So thanks very much. I appreciate this is our first one back in for about 6 or so months, I think, is it? So perhaps a little bit rusty. All right, but we'll get back into our groove. All right, it's like coming back, as I was saying earlier, coming back from a break. You shouldn't launch yourself in full flow, okay, on day one. We'll get back into our groove. It'll be fine. There'll be plenty for us to talk about and listen, all right? Excellent. All right, listen, thanks very much, Ian. All right. Enjoy the rest of your week. Everybody else, listen, have a fabulous trading week, okay? As always, we wish you the best of success in your own trading and investors endeavors this week. And undoubtedly, we will speak to you soon on the TOGS Trading Podcast. Thanks very much, everybody. Cheers.